Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB, two for the price of one today. I'm Nadine Blaney.
I'm Juliette Sarli, and there was a few bargains to be had on the market today, Nadine, but it does look like we've finished fairly flat. Let's have a look at where the CIBO 200 is, virtually unchanged, and I think the S&P ASX 200 also not really seeing much momentum. It was higher early on in the session, in fact quite a good movement coming through, but when you look at 8,975, you've got to say that is still a pretty good outcome for the S&P ASX 200, 25 points away from 9,000.
That's what I was going to say. I mean, the blockade is holding. We're seeing that peace talks may resume. U.S. President Donald Trump saying that talks to end the war could resume, in fact, over the next couple of days. So global equities are nudging higher, fresh record highs, well within view if you take a look at the S&P and the NASDAQ as well. What I am keeping an eye on right now are U.S. futures. They're mildly negative, and that might explain some of the selling that we've seen here throughout the afternoon. But around the region, markets are still looking really strong. The Kospi is up by 2.3%, a bit more muted gains in Japan, but the Hang Seng is up by 0.4% as well. And of course, those markets still ticking along as we make our way toward the European Open.
Absolutely. So we are focusing in on the potential here of further talks between the US and Iran, whether or not there's going to be round two, whether or not we are going to see a peaceful outcome here, which is of course what the world wants. And then to that earlier point, that means that 9,000 point mark on the S&P ASX 200 is looming.
Because while that CIBO Australia index looked a little negative, we do have some green on the screen here still for the S&P ASX 200 as the last of the day's trades roll through month to date. So, perspective is everything. Month to date up by 5.8%, so pretty close to 6%, and we're up still in positive territory for the 3 trading days, I guess, that we've had so far this week.
Yeah, but low on energy. The energy sector a laggard, down 2% as we see crude oil coming under pressure, which is, of course, on the back of this hopeful news that we are going to have a resolution. Let's have a look at the energy stocks and how they performed today on the market. Santos down almost 3%, Karoon Energy, Ampol, Beach Energy under pressure as well.
Yeah, not really any big surprise there. Now, taking a look at some of the metals complex, we've got copper smelters in China pressing ahead with production curbs amid that acid export ban that has not been talked about a lot. It's these reports that Chinese copper smelters are looking to trim output. So, of course, that could have a positive impact on price. We did see the copper players really here rising throughout the session.
All right, let's have a look as well at what we are seeing with the financial focus there. The bank's mostly under pressure. CBA, though, still looking good at $183.
I know, you can't complain when you've held your shares for a while, can you? All right, let's take a look at the market in terms of tech. So we've seen a bit of a tech rebound. WiseTech, one of those names that just consistently comes up in conversation, up by 3%. Perhaps some buy the dippers moving in, bargain hunters as well. Look, Life 360 putting on 1.5%.
All right, well, one of the other key focus for investors today was this momentum of what companies have seen in terms of the war really affecting them. Virgin saying it's going to take about a $30 to $40 million hit to its fuel costs, but it did maintain its earnings guidance, and that's because it's hedged very well, so shares up by about 6%.
Yeah, Virgin Australia was featured as our stock of the day, so we'll get you across some analysis in just a tick. The day began with a few updates coming from New Zealand, including Auckland Airport reporting an 8% jump in international passenger traffic in March as stronger short-haul demand offset disruption to those Middle Eastern routes.
Yancoal, it's making a major move into coking coal, acquiring an 80% stake in the Kestrel coal mine, which I believe is Australia's biggest.
Yeah, and that came out after the market closed yesterday, probably being brought down in tandem with some of those other energy names. Evolution Mining has swung to a net cash position of $42 million as of the end of March. No big surprise, strong gold margins have helped to drive earnings, and the company saying it's on track to deliver on its FY guidance.
And then Boss Energy down about 9% because it's cut its guidance at its Honeywell project.
New Farm. There's one that we haven't seen soar for quite some time. Well, it posted its biggest gain since 2023 after forecasting a 17% increase in first half underlying earnings, with plans to cut a further $50 million in costs. And with fertilizer becoming in short supply very quickly, I suppose it could benefit those companies as well. Mesoblast also doing very well, bagging a license for its Mayo Clinic developed technology. Yeah, so Duratec as well in the smaller end, gaining the most in 3 months on securing a $281 million defence project to support infrastructure capability at a Western Australian Navy base. All right, let's welcome to the COB Mark Gardner from MPC Markets. Good to see you, Mark.
Good afternoon.
So when we're seeing this market getting back towards 9,000, holding pretty much well, even though we don't have a resolution, are we seeing a bit of fatigue with the war, do you think?
Yeah, look, I mean, it was very much coming through in the US. They sort of washed their hands of it about a week ago, truth be told. But, and if you sort of reading that very US-based, US-centric financial press, they kind of moved past it frighteningly quickly. I think the assumption over there is that that overall, they're the USA, their military might, they'll eventually win out in the end. Look, they had the Israeli-Lebanese conference in the White House today, but Hezbollah not invited, so I'm not entirely sure, what that's going to solve. But I mean, Trump's doing an extraordinarily good job of keeping up just really constant and very timely announcements and leaks to the press about progress. The Iranians really haven't, they've either denied or not really come to the party on any of it. But it's one of those things that when you've got a master of the media like Trump is, he, and it was a bit of a genius move, even getting them to the table for the first time in 47 years, in sort of forcing their hand. But it's lulling the market into a bit of a false sense of security. And now we've got earnings to distract us as well.
Well, that's what I was going to ask you about, because we've had these bank earnings coming through. And Jamie Dimon, JP Morgan, he wasn't pulling any punches when it came to his view about risks, just the risks that are building out there.
He's notoriously bearish and always outlining the risks, which is just what some of you want from from the CEO of the biggest bank in the world. So realistically, there is private credit bubbling under the, we're talking $500 billion worth of bank risk there. The Fed chair had a meeting with all the bank heads and Scott Bessent overnight as well, and nothing's come out of that, but they were meeting about having to pump the brakes a little bit on Anthropic, and having to sandbox all their tech just in case, because they're extraordinarily worried about how dangerous that new model could be. But there was a little bit of subtext that they were also to bring their exposures to private credit. And Wells Fargo got hit about 5% despite beating expectations last night on their private credit exposure. So there is a lot of other risks generally floating around. We had this situation back when Russia invaded Ukraine, where it was like we bounced back out March, April, and everything was okay again, and then it rolled over and made that really horrible June low, and which was a bear market. We eventually bounced out of, obviously, but yeah, the inflation numbers and the effect of on the consumer, etc., will come in figures down the line. So at the moment, we're really planning on I think sitting on our hands at the moment, sticking with our high conviction stuff, and really being patient and trying to buy
buy the dip. Yeah, you got a chart for us. Let's bring that up and have a look at what we're buying on the dip here.
Yeah, so look, we're back to record highs in the S&P. We've got 7 out of 7 of these valuation alerts flashing again. It's basically as bad in most cases as where we were at the peaks of the market. But one thing, interestingly, I found, I picked up on someone else mentioned, and I went and fact checked it, but in the midterms, in the 12 months leading into the midterms, on average, there is an 8% plus dip every single midterm since the 1940s. On average, it's around about nearly 17%, and it does bounce quite sharply out of that low. And like near 80% of those lows are between May and October. So that whole sell in May and then the Santa rally, which are two phrases that we love so much, it'll really play into that. But it is unbelievably consistent. This once every 4 year sort of move and dip into that election.
Yeah, will somebody ring the bell? That's the first Santa Claus rally mention on Ausbiz for 2020.
Yeah, in
On
April.
What is it? 15.
So it begs the question: what is on your high conviction list?
We've sort of stuck by tier links. We're looking at a few. There's been a few of the upgrades in some of those software companies leading into the US earnings season. We're keeping a close eye on that. Energy, particularly electricity infrastructure in the States, is a massive election issue, and we're starting and polling as one of the top issues. So some of those infrastructure companies in the States as well. Here, I mean, we still like BHP. We've been long-term holders of that. The gold miners as well, because we think that all of this disruption and then the tariff concerns and having to refund the tariffs and obviously extra defence spending, etc., is not going to be good for that US debt. So we're still not very favourable on the US dollar, which I think gold and silver and real assets will start to play out to the upside again once we see the pass through of the inflation. From this, we're still 44 days is the best possible case for us to return to any sort of normal in oil supplies. So I think we'll have another bump in the road at some stage. So I think having that, having those high conviction lists and all those shopping lists and being patient and not chasing it up here. I mean, look, at the moment it's probably a good opportunity to remember how much you were freaking out a couple of weeks ago if you had a couple of holdings that were getting really hit, and maybe just reviewing those and sort of sitting on your hands for a little bit, which is not a very stockbrokery thing to say, but the value of being patient for a few months could mean that you have a really good couple of years leading out of some lows.
Time in the market, as they say. Mark Gardner, thank you as always. Mark Gardner from MPC Markets.
And I had the pleasure of hosting the call today. If you haven't seen the episode, you might want to catch up with it. I will give you a sneak peek right now because that's the kind of person I am, Jules. Virgin Australia was the stock of the day. Andrew Whiteland from DP Wealth Advisory and Henry Jennings from Markets Today.
Virgin, from memory, is about 93% hedged with their oil exposure, about 70-odd% exposed with their jet fuel exposure, albeit the cost of refining that jet fuel is markedly higher than what it was before. So you're right, the market taking a degree of comfort from that news, because, in my world, talking to a number of my business owner clients that are just... I was going to use an emotive term, amazed by the price increases that are coming through in that transport space.
Virgin obviously hedged a lot of their fuel exposure because they were coming to IPO. Dave Emerson. Now, I have to say, I had to look up who the CEO was of Virgin, and it was obviously coming into the IPO was Jane Herdlicker, but Dave Emerson is the man in charge now. And I have to say, he's done a relatively great job in terms of hedging. The hedges don't last forever. So in that respect, they will run out. If the oil price continues to stay $95, things are going to get trickier. But at the moment, things are okay for Virgin.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at some of the leaders and laggards in what was a pretty flat session by the end of the day's trade. We touched on Evolution Mining and the general consensus in gold players today, but of course Evolution on the back of its update, up 10%. DroneShield also had a good day, as did Mesoblast. We touched on that, and as I mentioned, just a lot of the gold players looking good. Ramelius up by about 6%.
Now, if we look at what did not perform, look no further than Linus. It did have a broker downgrade to equal weight by Morgan Stanley, although its price target was lifted 11% to $20.45. You can see, though, it finished today even down 7% above that price target. Vulcan Energy is on the list, Temple & Webster. That one was mentioned on the call as well. Tilix had a great session, a couple of great sessions, so just a bit of give back there. And Viva Energy, as we saw energy names sold off.
All right, let's look at the small end of town. Orthocell had a really good session. In fact, I do remember seeing an update about that.
Hospital contract win, so it secures access to, in the US, 221 US military medical centers. So good for you, Orthocell.
Yeah, there was a company that said something about Denmark. My brain is failing halfway through the week. Exactly.
If you watched today's episode of the call, I made such a big blunder, but no one, as I said, no one's perfect.
Not even us. All right, let's look at the laggards in the small end of town. Canyon Resources off by about 10%.
Yeah, just you can see there's a big thematic going on there. Okay, so tonight we talked about earnings season, quarterlies in the US with Mark, and we get more of those banks, which always kick it off there. Bank of America, Morgan Stanley are coming your way, so it'll be really interesting to see how the market reacts to that. And a bit of data, the U.S. Empire State Manufacturing Index, so we'll be looking for any hints of any price pressures coming through.
All right, tomorrow, big one, the unemployment rate for March, expected to be stable at 4.3%. Of course, this is the other part of the RBA's dual mandate, and Stephen Walters from Optimal Economics telling me that the RBA is apparently, well, in his view, in a really nightmare scenario at the moment when you've got these cost of living pressures, you've got higher petrol prices, but they need to keep inflation in check, so we are likely to see another rate hike. Quarterly updates too from AMP Netwealth, Transurban and Alcoa.
Who would want to be a central banker right now? So complex, the situation, particularly here with our inflationary pressures and still, low unemployment rate. Okay, so look, I am going to spin this positively. So yes, the COB Australia Index ended flat, and yes, it's pretty flat for the S&P ASX 200, but positive to the tune of about 0.1%, 8,978. So if we see a positive session in New York, Juliet, as we started out with, that 9,000 level is not out of reach, and it's a psychological level. So it'll either bump up against it and fall, or really surpass that. U.S. futures, though, not looking crash hot right now, but just mildly negative.
Yeah, and so all in all, I would say a pretty good outcome given that we are just sort of consolidating at those levels, and really now only 22 points away from 9,000 on the S&P ASX 200. We will see what tomorrow brings. Join us from 9:45 a.m. Eastern.
Have a good night.